Hey everybody, this is Paul and got my co-host Walt here, back with the Green Chutes podcast, here to talk about a couple different topics today related to real estate market, inflation, interest rate. So before we start it off, Walt, let us know let everybody know how you're doing, how you've been doing.
Oh, I'm doing fantastic. So yeah, my mother just we just had a 70th birthday party for her, so that was
Congratulations.
really nice. And yeah, we're doing well. So company's starting to pick up some steam, which is great. We're getting busier, and that's all fantastic. So I have no complaints at all, Paul. I'm
Awesome.
just I wish the world was less. Maybe a little less crazy.
Less
And I wish there
chaotic.
was, yeah, more. I wish there was more certainty for sure, with some things, but we can't. You know, the world isn't perfect, so
Yeah, yeah, can't have it all. Yeah, I mean, speaking of the world isn't perfect, that can start us into our first topic, as we saw the Federal Reserve cut the interest rates in October. And of course, what did mortgage rates do? They didn't go down, as everybody, I shouldn't say everybody, but many people will say, hey, if the Federal Reserve cuts interest rates, the mortgage rates are going to go down. But in fact, the opposite happened. Mortgage rates went up. So what are you seeing mortgage rates wise? And tell us what you think's going on there.
well, I think what we're saying is more of a shift into FHA. So, and I know we'll talk more about the government shutdown. But FHA products are, cheaper than conventional products for a lot of people right now. So, talking with our main lender this week, basically told me, hey, price out FHA on cash out, price out FHA on purchases. Um, and so, yeah, we always do that now. The one thing about FHA loans is the mortgage insurance, which will stay on longer than typically than conventional mortgage insurance, and it's a set factor. Not as much, not as dependent as much on your credit score, right? Or on your LTV. It is a little bit, but not on your score so much, like with conventional loans. So I think we can anticipate more of a shift into that, Paul. Um, the other economic news of people losing their jobs, right? And so household incomes in a lot of places and will decrease. And I think that'll further you'll have more FHA applications for sure. So
Yeah, one of the big benefits of FHA is they're not as tight on the debt to income ratio, as well as your credit scores are a little lower than you'd have with a comparable conventional loan. And then even with down payments too, I think on conventionals you can get a pretty decent down payment, low down payment, I should say. But I think is it are they equal in terms of down payments, conventional or FHA, or is FHA better?
there's conventional 1% down products right now. But you have to income qualify for those, so you can't make too much money. Um, and 3% down conventional loans are available for first time home buyers. Otherwise, it's 5% down.
Okay.
As a minimum for a single family residence that you would live in if you've had a title interest to a property in the last 3 years. So,
So you haven't
um,
been having any issues with have you closed any FHA mortgages during this government shutdown period?
yeah, no, and there's not any issues now with
Okay.
USDA. They are shut down. So, unless I'm mistaken, they stopped taking commitments, and USDA loans are underwritten. So your lender will underwrite those loans, and then they actually get shipped off to a regional center, USDA center. In our case, Columbus, I believe, for Ohio, right? But
Okay.
uh, but those loans will be underwritten as well federally. So that being shut down, lenders are no longer being able to pre-approve people for those loans.
Okay.
So, I guess you could make it contingent on the government, turning itself back on. Um, But yeah, I don't know, Paul. So
Yeah.
I think VA, FHA, there haven't been any issues, but that's because it's more of a program set up and insured by the federal government, not, actively managed and administered as much as maybe, some of the other kind of loans that might be out there.
Okay. Yeah. Yes, I think part of it too is the reason the rates go up. The mortgage rates went up, in contrary to the Federal Reserve cutting their rates. Is I think part with this government shutdown, inflation numbers are kind of high, so people are kind of retreating. They call it retreat to the safety. So with the downward pressure on the interest rates, from the Federal Reserve, it's had an opposite effect. The 10-year bond started going up, and that's what the 30-year mortgage rates are usually based on, 10-year bond plus some premium. And so we've seen with that the pricing has gone up. I think prior to the Federal Reserve rate reduction, they were looking at the 10-year bond at around like 3.9, getting down there to the low 3.9s. And then I think recently, yesterday or today, it's at the 4.1, 4.09 rate. So that's had a definite impact on mortgage rates as well too. So we've seen a bump there, and I've been seeing it. Looking at even just the local market, driving around, I've been seeing a number of new listings popping up. But then I've also been reading and hearing from personal people that they've had their home on the market for months now, and there's one post I was reading on. It was a clip from a Reddit post, and that person was saying they're at the point where they're going to need to borrow money in order to close on the house because their mortgage is at their whatever the current value of the house is. They need to cut the price a little bit. Then in order to close on that house, then once you close, unless you have enough money to pay off the bank at the time of closing, you technically can't close. So you might need to take a loan out. You might need to borrow money from your credit card, 401k, family, whatever. But in order to pay that loan off and just get it out, I think somewhat it makes sense too, especially if it's not selling and you don't plan on renting it. Renting can be pretty hard. It can also get pretty expensive. But then sitting on that house, depending on your mortgage payment, if you're paying like $2,000-3,000 a month, that adds up over time. So taking the loss now and moving on, getting on with your life and getting out from under that debt can be a big benefit for some.
Absolutely. And I haven't seen, too much of that, that specific scenario yet. But what we are seeing a lot of, and I'm sure a lot of agents would agree, is just older individuals with a lot of deferred maintenance on their homes, who had lived in the homes, who now, want to downsize or want to leave, right? But they're essentially being priced out by taxes, or being priced out by other factors, right? But then it's it's so, how do we accommodate those people, right? Because they need to go somewhere.
Yeah,
They need to have places to move to that are accommodating for them. And so it's, is there enough inventory for, ranch homes, right, in the 250,000 range. I don't know, but I would say, yeah, there's a lot of just scenarios in real estate, and I do expect pain right now, just because we had, a lot of people, well, especially when rates had ticked up, right, over the last few years, to get into these mortgage buy down situations, and they were able to get seller credits and buy their rate down. Or I could even conceptually imagine that people could have had that, paid out of equity, right, or paid at closing, but maybe now they regret that, as they go to refinance or they go to sell, and maybe the value's not there.
yeah,
Or maybe they have to sell just because of, the interest rate swing. So if you bought your rate down to a 6%, and you're not going to be able to refinance, um I don't know.
Yeah,
But just
it's a tough.
and those buy down programs, right? That they bought it down and now it's going up to 8%. And I just hope, hopefully they have equity there, or they, like you said, they need to be able to bring cash to close.
Yeah,
So,
yeah. Those
we
were
like to set up our refis where people don't bring cash to close, so um I think that's an ideal situation.
yeah, yeah. I mean, a lot of that was that the whole thing marry the house, date the rate, and that did not end up working out well, and they weren't permanent buy downs too, which is the big problem. They are, it's in a sense became like an arm adjustable rate mortgage, and now we had this recent jump in rates where the lower rate for a year or two might have worked, but if your income didn't catch up, and even if your income caught up, and now you've got higher taxes, you've got higher insurance costs. So even if your income caught up, but now you got a higher mortgage payment from your principal and interest, taxes are up, insurance is up, and that can take a big bite out of a lot of people's budget. And you mentioned the deferred maintenance too, and so that's a big thing too. I've always discussed that in my side of the real estate sales world is deferred maintenance. That's one of the big things. It's a big killer of value in your home if you're not maintaining that roof. You're letting leaks come in, or you got broken windows, you got pest intrusions, water coming in. Eventually, it gets moldy. I've been in houses too where it's just gotten so bad, and it's the point that people can't live in there anymore just because the mold contamination. The walls start literally just melting because of the water and the mold that they're forced to move out. So it's you know with inflation where it's at these days, and even maintaining a house can be pretty expensive. Just calling out a plumber, a HVAC person, electrician, that can cost an arm and a leg. So I can understand where people are like, hey, let me just put that off for now. But it's one of those things that you put it off for now, you might be trading off a relatively low expense for later on if you lose the entire house, or you gotta pay for a new roof. That gets to be a huge expense, and that's going to be much more painful to handle and budget wise.
Yeah. Oh, and it's a huge problem. And when you go to close, right, and appraisers, home inspectors, and you're gonna have to get through that. And if the house is bad, there's certainly gonna need to be capital invested prior to closing, which presents challenges, as I know as well.
Yeah,
Um, but yeah, it's definitely, it's good to see though that the market is heating up, and that more stuff, more activity appears to be happening. So, we're seeing a lot of people that have been in homes for decades, and they're looking at multi-generational, housing, or um, downsizing potentially. And so that's creating opportunity, and inventory, I think, is starting to open up. To just in the last week, about and I'll pre-approve buyers, and sometimes it'll be years, especially in recent markets, it'll be a long time before they actually find something. And yeah, so we have a bunch of them coming back this week, which I think just is people people, even though interest rates went up, right, in our world. The fact, I think, is people are starting to, they're starting to have more confidence, and do stuff for whatever reason. So,
yeah,
and of course, the dollar losing 10% of its value, in the last year is an issue.
yeah,
So it's everything. Even though gas prices might be lower, or certain things might be lower for political reasons, or for you know whatever mechanism. Long term, I think that just the money needs to be controlled.
yeah,
So
yeah. The rate of inflation, yeah, it's kind of gotten a little crazy out of hand there with especially when things just start going up to it. Eventually, even if it's things you're not necessarily buying for your house, your lumber, your roofing material, you're not buying it every day, but ultimately it's going to impact you because once the insurance company, they have to say, okay, we need to look at what's it going to cost to say replace my house here in case it burns down or gets knocked down by a tornado. That if they had to build it new, then the cost for that lumber, the roofing, whatever, that's going to be much more expensive than it was 4 or 5 years ago. So they need to account for that, and that's why your premiums go up. That's why everybody's premiums have been going up across the board, just because the cost of living has been going up. So everybody's got to have to chip in, so to speak, on the insurance premiums in order to increase their reserve pools, so that way if something does happen, that they're able to cover those losses for homeowners.
Definitely. And I hope they're paying all the celebrities that do their commercials in, future equity promises and not in, not in cash on hand. So
Maybe in crypto.
yeah, yeah, they could pay them in that.
You mentioned people getting a pre-approval letter and then waiting a little while. How long does let's say I come to you, I get a pre-approval letter, and how long is that valid for? When do I need to say re-up or give you additional documentation just to make sure we're on the same page there with that pre-approval letter?
So normally, or what we can do is soft pulls up front, and a lot of lenders have been doing that. So it's not a hard inquiry, but it's like the same as a normal credit report or a normal hard credit report, that it'll last for 3 months generally. Those
Okay.
letters, your pre-approval letter will last, um generally that credit report, that hard credit report. Now it's kind of a technicality. The hard credit report will follow the number of the soft credit report. But if we're close enough to a purchase, or we know, hey, these people are buying this, we'll just do the hard credit report,
Okay.
up front. And we just have to have using that credit report, we have to have it delivered to the investor within 100. I think the end investor within 120 days, I believe.
Okay.
So it has to be within Freddie within 120 days. So generally,
Yeah.
like if a file is more than 90 days old, and you or a credit report is more than 90 days old, and you submit it to a lender, they're gonna want a new one. So
Yeah. Yeah. Another factoid, going back to the government shutdown, I was reading online, looking just to see the impact of this government shutdown. A lot of these employees are, they're not working. Those who are working aren't getting paid, so that puts a crunch on their budgets. A lot of them are, especially with the air traffic controllers. I was reading an article today saying that, hey, they might have to start shutting down certain parts of the airspace because they don't have enough air traffic controllers. They can't afford to work the long hours, so they want to do their second jobs or whatnot. But the factoid that I saw was each day that the government shut down, the economy is losing about $2 billion. So that's whether it be contractors who are not going to work, federal employees who aren't going to work, they're not driving to their offices, they're not, eating out for lunch, they're not filling gas in their car. They're cutting back, not maybe they are cutting back on discretionary expenses. You're not getting paid. If you need that new TV because your old TV is kind of on its last legs, you're just gonna push that for a little longer and let it go for as long as you can. Versus, hey, now you got a paycheck. That's a different story. You might be willing to say, okay, let me go pick up that new TV since I know this one's going to die within a couple of days, type of thing. So it's put a big crimp into the economic spending. In that, I think it was
oh,
Dissent. I
we're
was
gonna see
reading.
businesses fail from this
Yeah,
for sure. Yeah, unfortunately.
and I was seeing that there was a quote from Treasury Secretary Dissent saying that some parts of the economy are in a recession. So now they're officially coming out to say it too, and this kind of intentional, almost intentional, you could say, shutdown. They keep going. Both sides are kind of at that standoff. It's maybe they're looking to push the economy into recession because that things have gotten so high, so hot, so fast in terms of inflation. If recession, cleans out kind of the dead wood. You got, like you said, the bad companies there. They need to go bankrupt. They need to, if their business plans aren't profitable and they're just kind of living on free money that the Federal Reserve was doing for such a long time, it's time to cut that dead weight, let that money go towards more efficient, more profitable businesses, and that'll help everybody out.
Absolutely.
Some
Um,
short term pain
definitely.
for you should get some long term gain though.
I hope so. And it is a natural thing. It's just unfortunate when, some people maybe didn't didn't plan or foresee, what was happening. And of course, I feel for, um, especially right now, all of your commissioned officers, right, in like the acquisitions world or in the military in general, that work with civilians on their teams, and those people are essentially furloughed. So those men and women are working very hard to keep everything everything moving in the right direction.
Yeah,
For critical programs and truly things, pertaining to national security. So I really hope that they turn the government back on very soon.
yeah,
Um, yeah,
yeah. The essential employees, especially too, and they're forced to work without pay. I mean, ultimately, they should get back pay, which is good, but same time too. I mean, they need that paycheck. I think there's probably, I think next week would be the third paycheck they would be missing because of the shutdown, and that puts a big, not unfortunately not everybody's built up savings and got a good savings plan or some sort of backup plan that involves something other than a credit card. So a lot of people kind of paycheck to paycheck, unfortunately, and that's circumstances vary. I'm not judging anybody, but that paycheck to paycheck, especially when we got corporate layoffs going on too, so that's it's causing big ripple effects throughout the economy. The shutdown as well as these big layoffs. Like, well, Amazon just announced 14,000, but I think that's worldwide, not necessarily just the U.S. But it still has an impact. Whoever's been laid off here in the U.S., not just Amazon, you had Microsoft, you had some other companies as well. I believe Facebook was laying off some of their AI people. So it starts slow. It's kind of that that snowball effect. It starts slow, and as it kind of keeps going, and it gets bigger, and then it's pretty soon it's a pretty large snowball that's just causing a lot of damage and a lot of havoc.
yeah, and I worry that that's what we could honestly be in for. Um, and so if the opposite, or if the opposite of pro is con, what's the opposite of progress?
Congress.
So I don't know. I just think I kind of have a cynical view of leadership, unfortunately. And I think really what it is up to is just for business leaders and for people out there in the community to do what we can to help the people that we can. So
Yeah, yeah. These days, the politicians have kind of sidestepped their primary purpose, and that's serving their constituents to just paying lip service to their constituents and maybe more serving their donors, which is unfortunate, and that's what caused a lot of squeezing amongst the middle class and the lower class, whereas the some of the very upper echelons of society, they've had their assets protected. Like the last the great financial recession we had in the back, the GFC, Great Financial Crash, whatever they want to call it, where nobody really went to jail for all the fraud they committed, and how many people lost their homes, and how many homes were just kind of left there to rot while banks sat there and did nothing, couldn't figure out how to do short sales. We're slow on doing foreclosures, and then just overall, just big bailout packages for all these large companies, these big banks, these big investment firms. Whereas Main Street, as they say, really didn't got anything except for lip service. Like, oh yeah, you understand you're hurting, but too bad we're not helping you out. We're just going to help these rich companies out, these rich billionaires out, and you know maybe it'll trickle down to you. So that's an unfortunate aspect, and hopefully that's not something they do this time around.
yeah, and I mean the big concern is, I think, for a lot of people, is bail-ins. Truthfully, so you had a taxpayer bailout, the last crisis, and a lot of people have been predicting that this time, they could potentially seize assets, of depositors. So
Yeah,
um, that's something that people should be aware of. And when we talk about being diversified and having different things, different places, now is absolutely the day, and the hour to do that.
Yeah, yeah, definitely. Yeah, no, it seems that it's kind of this recent run we've had in the economy has encouraged a lot of people to go all in on one asset. Because I know I work with a lot of real estate investors on the real estate agent side, and so that's that they're kind of gone all in onto the real estate investment side. When you talk to them about stocks, it's like, oh, I don't know anything about that. I don't do anything that with that. They might dabble in stocks, but that's one of those things. And then you talk with the stock investors, they're all into stocks, and you tell them about real estate, tax benefits. Oh, I don't deal with that. My stocks are up, 30, 40, 50%, or even more over the last however many years. So I'm all in on stocks. So that lack of diversity. So if one thing, I mean, if the stock, in my opinion, if the stock market goes, that's going to take everything with it. Because real estate also, there's a lot of leveraged money that people used from their stock gains to go invest in real estate, whether it be through, the REITs, the real estate investment trusts, or they, hand off money to be a limited partner in one of these syndication agreements. That's we've already starting to see some of these multifamily syndication agreements starting to blow up. It's only a matter of time before, some of I understand too, the stock market leverage is like at all-time highs. So you just need a minor haircut, to start taking that leverage out of the system, and then people have to force sell their stocks, or if they need to come up with cash. Stocks are easy to sell, quicker to sell compared to a house, as you know. But ultimately, if they have to come down to that too, they've got multiple houses. They overinvested in Airbnbs, overinvested in multifamilies. Suddenly now they're either out of a job, they're not working for whatever reason. Now they need to start pulling that money back. Guess what they're going to have to sell? They're going to start selling the real estate. They can start selling their stock, but that's gonna have a big ripple effect, and that's gonna just pull a lot of liquidity out of the system.
Definitely. Um, and I think all we can do is to just prepare for that. Is to um, tell people the truth. So people will have an idea that, oh, it's stable, and I think human beings have a very short memory. um Almost, I think, being cynical again, but maybe by design. So you can look to the past for what may be coming, or how people psychologically responded, or what they did, and that'll maybe give you insight or guidance on, hey, maybe I should position, or do this, or where to live, where what to do, right? Like, if you're what your aim as far as survival, or building something, or thriving, right? Like, you have to keep an open mind, because I think it really is financial uncharted waters. um, and I don't think the system is as safe and secure as many of these talking heads would have us believe.
Yeah,
So
yeah. I think the talking heads are mainly just there to talk, keep people calm, and keep people investing in their automatic investment or whatever. And ultimately, as long as people are automatically investing, people keep putting into the stock market. Yeah, then the market will keep going up, but there's a point at time too where we've got boomers who are retiring and they start pulling out more than that's going in. That is going to cause values to go down, because they have to go down as that money comes out. There's not enough new buyers to keep that price going up. It becomes a Ponzi basically. Since the new money starts drying up, it can't pump it up any longer. Than as the old money starts pulling out, eventually it might become everybody run for the exits. Whoever's the last one out is there won't even be any lights to turn off as well too. You might be left with nothing, unfortunately.
yeah, especially we talked last time about the stable coins. So will stable coin holders take, they're going to take precedence in a bankruptcy over depositors, right? Could that be? I don't know. So
Yeah,
yeah, it's interesting, and um troubling times, I think, for a lot of people. And I don't know. It's immense opportunity if you're like trained for it and you're ready to help people and you're ready. It's a different outlook maybe. But you still, being in real estate, you still come across people that you can, you can't help, and so
Yeah,
that's what's sad. And so I just my concern moving forward is to see more people that can't be helped because of um because of past mistakes, right? Or because of circumstances, you know, beyond their control, or not circumstances that they can't change.
yeah,
So,
yeah. I mean, so it's the as we talked about before, kind of start wrapping this up. Preparation is key. Just listening and learning. I mean, not that we're the most popular podcasters out there, but hey, we're trying to educate and then teach people. So if you're something you've watched, you have any questions, drop us some questions in the comment section below, and then we're happy to chat with you. Walt here's the top loan officer there, willing to help you out. I help on the real estate agent side, so that's what our goal is. I mean, we try and protect ourselves too, but we also want to protect our clients as well, and make sure that that they get the guidance. I mean, there's obviously not not everybody's going to get the golden answer that leads them to safety. So that's unfortunate, but we try our best
yeah,
and we do our best as we can.
definitely.
All right, we'll sign off on that. Thanks again, Walt.
Hey, have a great evening, Paul. Have a great week, everyone.